Let's get a little bit more perspective on what's been happening in the markets. Joining us with a little more color on this Monday morning is Barry Schwartz. Barry is the Chief Investment Officer and a Portfolio Manager at Baskin Wealth Management. Barry, we saw that market rally off the lows. Nice to see you. We're now getting through earnings season. We're navigating the oil uncertainty. What do you make of the markets right now?
I'm trying to ignore all the bad news, John, because there's going to be a lot of it. And the next few weeks, the next few months are just going to get awful. And so I really have to put my attention. I know we have to talk about the things that happen day to day, but I'm really trying to focus my attention on the next 6 months, 12 months. Focusing on companies that are going to survive here and even some large caps that are going to thrive. But yeah, I mean, you look at oil today, remarkable drop. I think some of it has to do with technical changes, but from what I'm reading, there's nowhere to store this oil.
So you use that word, and I do want to talk about your long-term views, but you mentioned that word survive or survival. In your observations, how many energy companies do you think could be basically in a position where they might not survive if things don't change?
Well, they're at the moment, it doesn't look like how can they survive on these prices? You look at Western Canadian Select oil down tremendously. You look at regular oil prices down. I don't see how companies are actually getting any return on their investments at the moment. So they're going to need some serious government assistance. You're already seeing it today. You know, the announcements by Husky, the announcements by other companies just cutting capex like crazy. And so the knock-on effects are serious. And it's not going to improve until we open up the economy, right? There's just no demand right now, and Saudi Arabia continues to pump out the supply. So this will end when either there's no more oil to be stored, there's no more capacity left, or the economy really opens up in a big bad way. Those two things seem unlikely in the short term, but it just shows you the risk of investing in commodity companies.
So let's talk about what you do if you're holding stocks that have taken huge losses. I was referencing an interview that Charlie Munger, the number 2 to Warren Buffett of Berkshire Hathaway, gave to the Wall Street Journal over the weekend. One of the things he talked about in that interview was the idea of harvesting tax losses. What are the pros and cons of saying, okay, I'm going to cut my losses on this stock and maybe there's some kind of taxable benefit from it?
Yeah, well, for sure. I mean, obviously in Canada, we have RSPs, we have TFSAs. So if you sell securities in there and you have a loss, unfortunately, you can't claim a capital gain or a loss. But certainly for your non-registered accounts, there's some ability. For example, let's say you own TD Bank and you bought TD Bank at $70 a share. Now it's trading in the 50s. And you say, well, I still like the banking sector, but maybe I can turn some lemons into lemonade here by selling my TD Bank and switching into Royal Bank and keeping my exposure, knowing that probably TD Bank and Royal are both of high quality. So that's the kind of things that we've been doing for clients, is looking at, especially over, the markets have been good. 17, 18, 19, we've had a number of terrific moves in the market, especially our U.S. stocks. So with capital gains there's ability to offset some losses. You don't have to make your money back the same way, the same way you had it in the losses. So, for example, if you have losses in oil stocks and you don't think they're going to come back, maybe you don't switch one for the other. Maybe you just focus on the higher quality companies and sacrifice some upside here for capital protection.
Let's talk about trying to define things like higher quality. I had a conversation recently with the billionaire entrepreneur Jimmy Pattison, runs private businesses, but I asked him what is key to him right now, and he said 2 words: cash flow. If you're trying to determine the kinds of companies that are going to have decent-looking cash flows during this period of uncertainty, what are the kinds of investments you're looking at, Barry?
Well, the market is telling you exactly the companies that are winning right now. So all you have to do is look at the companies that are positive year to date, both S&P 500 in Canada. And you can see that most of these companies are capital light. Technology companies, software companies, companies that sell essential products like grocery stores and Costco, companies that have great balance sheets. I mean, we were all mad at Apple and Google and Facebook. How come these guys aren't spending their cash? Now, of course, they look completely brilliant because they're sitting with billions and billions of cash, and they're not at risk of going out of business. Whereas a company that's, like for example, Viacom, that spent many billions of dollars buying back its stock using debt, is now in big trouble. So these are the types of industries you got to look for, and the market's telling you which ones are the winners and which ones are the losers in this environment. But I understand, John, that to make money in this environment, you got to do things that are uncomfortable. Buying Amazon, buying Apple, buying Microsoft, they're terrific here, and I own them for the long term. But I don't think those are the kinds of stocks that are going to go up 10, 15, 20% from here when we start to get some good news.
Yeah, well, obviously we know the companies that have had the bigger declines in the market. Hey, Barry, thanks very much. Good to get your perspective. That's Barry Schwartz, CIO and Portfolio Manager at Baskin Wealth Management.